In this video, we're going to cover key aspects that you must be aware of in this week. One of them is the debt ceiling. Will the US government default on its debt and create doomsday scenarios, impacting not only every citizen in the US but also globally? How are bond traders reacting to the current events? There is still a lot of pressure on regional banks and little confidence that that pressure will stop. Despite this, the Fed says, well, it's their fault, they didn't manage the risk, but the banking system is sound. The Fed is also likely to be slower in cutting rates. What does all of this and more mean to you for the week ahead? Let's dive in. It's going to be fantastic. Hi everyone, I'm Ken from Crypto Trading KS. I'm grateful to be sharing this time together. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love by proactively learning how financial markets work and mastering fear and stress through positive excellence. If you would like to know where smart money buys and sells, please subscribe. Let's run the numbers. This week is going to be really important. You'll need your three-dimensional risk management. We've seen recently that the DXY has started to spike. Meanwhile, the VIX has remained very, very low. Oil is signifying that markets are under pressure and likely entering a recessionary state. However, the Nasdaq is still holding support, and we can see this blue line, which is Bitcoin, is indicating risk-off behavior. We can also see that gold is basically consolidating. It hasn't broken down and it hasn't broken up. Bitcoin can give a very good solid indication as to risk appetite inside the market. We can see that Bitcoin's price is basically on a downward trajectory. We'll need to look into it more to see where the structural support, smart money buy and sell levels are. But when we look at the top 8, we can see that on this 2-hour time frame, Bitcoin has outperformed all the top 7 alts. And also, Matic has shown the greatest weakness. With the debt ceiling crisis, the regional banks crisis, what the Fed has done to the financial system, with inflation, and so many other areas, you may just say the markets are going down, that you have one perspective and that the markets will crash. Professional investors and traders think very, very differently. They have three-dimensional risk management. They know the markets do what the markets do. They seek to move in alignment with the markets to become synchronized. I'm going to take you through an example of how to apply your daily three-dimensional risk management for the remainder of this week. We'll start with Bitcoin, and we know Bitcoin is just like the VIX. It's just like junk bonds. It's very, very sensitive to risk. Also, it's an exponential asset class, which means it feels it very, very quickly. With the debt ceiling crisis, the problem with the IRS and their reduction in taxation revenues, regional bank problems, equity flows, and money market funds, I'll explain that in a little while. With inflation, the Fed is burning the financial system, and there's also the G7 meeting, where they're seeking to level more and more sanctions at Russia and also address China's increasingly coercive stance. On the economic front, on May 15th, the Empire Manufacturing statistics come out, Treasury International Capital Flows. May 16th, retail sales. And you can see I put retail sales down here. Some events are very important to track. Also, on May the 16th, New York Fed Services business activity, industrial production, business inventories, NAHB, housing market index. On May 17, we get into the MBA mortgages, housing starts and building permits. This is an important one. If we see more and more supply constriction inside the housing market, it could be inflationary. Increasing supply will decrease inflation, but a constriction of supply will increase inflation. On May 18th, the weekly jobless claims come out, Philadelphia Fed Business Outlook, existing home sales, and the leading index. The Fed has been will be very active this week on May the 15th, May the 16th, May the 18th, and May the 19th. The critical one is whenever Jerome Powell speaks, and he's the chair. A lot of people need to listen to that because Jerome may give some forward guidance on what is actually their stance, but it's unlikely because the Fed is very, very guarded, but everybody will be looking and paying attention. One thing to note, when you look at cumulative capital flows to equity, the institutions have been taking out hundreds of billions of dollars from the equities market. The hedge funds are starting to increase their exposure. Individuals are taking their money out. There's a lot of fear in the markets at the moment. This is driving a lot of people to put their money into money market funds. And when we look at the GFC, we can see the GFC preliminary to that. Money market funds went parabolic, just went exponential, but notice they did drop off exponentially as well. There's no shortage of people letting you know that the end of the world is nigh. But for traders, that means volatility is incoming. And volatility is every trader's best friend. A lot of people say, but Ken, I'm an investor. I'm not a trader. Anytime you buy or sell, you are a trader. If you do it effectively or not is a different thing, but you are a trader every time you buy or sell. So the key is to do it really, really effectively. Through the CTKS method, we look at objective dynamic market structure. That's where the smart money is buying and selling. What I've done for you here is to just mark up 3 potential scenarios. We have an up case, a neutral case, and a down case. And this is in Bitcoin. It's very important to look at Bitcoin because of its risk on and risk off appetite. If the market feels that the Fed is going to increase its federal funds rate and further destabilize the financial market, we could see a very large rally in Bitcoin. Also, keep your eye on major events. All of these events will potentially move the market in one direction or another. Always have a 3-dimensional perspective. If things go well for the crypto market, we could head up to around $35,500 before closing out the week at around $34,162. This would be off many people's radar, but we do 3-dimensional risk management. It's on our radar. We think about it every day. If the markets do in fact come down, we would be anticipating something at around the $21,500 mark. This is by the end of the week. And the end of the week to crypto people is Sunday. Because crypto trades 24 hours a day, 7 days a week. The beautiful thing about crypto, when you master the extreme volatility that it presents itself with, you can't get locked in a situation. So many times in the stock market, you'll see a climactic drop and there's nothing that you can do about it. With crypto, you can control your investment. If you want to get up at 3 o'clock in the morning, no worries. Crypto is awake. Due to its high sensitivity for risk on and risk off behavior, Bitcoin is a Tier 1 chart. Tier 1 charts are not the charts that you trade. They're the charts that move the markets. The DXY is another market moving chart. Please keep your eye on the DXY. You can see that we've put 3 cases here together. We're looking at an up case around the 105, 181 mark, a neutral case around the 102, 820 mark, and a down case towards the 100, 738 mark. It was around 37 years ago that I started my finance degree. And my dad was always fascinated with trading, so I basically was learning about trading since I was born. So when I say I've been in financial markets for more than 30 years, it's a bit of an understatement. But understated is good. One thing that I've often found, people will tend to take one position inside a market. And you can see there's a lot of positions that people would take. And when it comes to different charts, the DXY could go down whilst Bitcoin and gold are going up. So just bear this in mind. Each day, Kate and I put out content. which is designed to help you to understand how to trade, how to invest, what to look for. We have the masterclass where you learn the knowledge. The CTKS method is all about levels. Yesterday I had some questions why I placed the trade. Please go back. Well, I shared a trade in yesterday's video that did quite well. If you go back and look at episode 880, that is the reason that I placed the trade. It was all about the depth chart. There's a lot of talk about oil dropping and continuing to drop. The G7 summit may turn that around. Just be aware of this. Gold is a really fascinating commodity. It absolutely shines when the world is imploding. The best way to say it, if there was a drama on, gold would have the front row middle seat. If you see someone acting dramatically, say, "You're just like gold." So what does it mean? When we look at a potential week-long projection, if gold is going up, there's problems inside the market, and its potential for gold to actually get above a fresh air gap and make its way all the way up to 2100 before closing the week out at around 2088. If gold just goes flat and consolidates, we'd expect something around the 2013 mark. And if gold goes down, it gets hit, we would expect around the 1965 level. Therefore, it's critical to look at the number one tier 1 chart, which is the S&P 500. Looking at our three-dimensional risk management from the downside, if the S&P 500 breaks down, expecting a weekly close around the 40.15 mark would be on the cards. If we find the sellers and the buyers are just shorting each other out, basically no single entity is gaining control over the other one, we would expect the S&P 500 to close out at around 41.29. If the S&P 500 breaks out of its stalemate and gets above this particular level, the 41.68 level, it could do incredibly well. Just something to keep your eyes on. Don't just assume, because there's so many negative news headlines out there, that everything is going to hell on a roller coaster. Roller coasters are really interesting. They come back up too. You are always protected if you remember Rule 4. Price moves in waves. It doesn't matter if price is going up or down. It will always move in a wave. All markets are intercorrelated and interdependent. The tier 1 charts depend on each other, and they intercorrelate with each other as well. If we look at the US 10-year yield, and this is a very important thing to look at, if we get a negative bias coming into the US 10-year, we could potentially close the end of week mark at 327. If we flatline it, around 347 would be appropriate. And if we start to break through overhead resistance around the 370 mark. Undoubtedly, the banking system is in trouble, and you can see it because of the price. Keep your eye on price. Price is the reality. Fundamentals are fantastic, but price will tell you what is actually happening. Fundamentals will tell you what's on the radar. Combined together, it's a perfect match. In the next couple of days, I'll be releasing an LV series into the masterclass, which is on US central banks and financial stress. We do an enormous number of deep dives inside the MC. One of the things that you want to bear in mind, there are a couple of fear gauges inside the market. The VIX is really well known. That's the volatility of the S&P 500. The NFCI is pretty much little known, but this is the Financial Conditions Risk Index. Very, very interesting. You can see it's sparked right up. It's coming down at the moment, as is the VIX. But the problem is the VIX of the bond market is going up to levels that we have not seen since the GFC. Does this mean the markets are going to crash? Don't have that scenario. The problem is, if you adopt one side of the market, and a lot of people adopt the same side of the market, those people are likely wrong. Financial markets are always moving in waves, big waves and little waves. The key is to become a great surfer. A lot of people simply don't trade because they're not really quite sure how to do it. I would suggest having a look at the past couple of videos. They're really instructive on how to get the right mindset. You'll find that trading and investing is very focused on your mindset. If you have the right mindset, you'll do really well. A lot of people think that if they go long at spot, they can't make money inside any financial market, so they leverage up. The truth is, everybody is different. I don't use leverage at all. I only go long at spot, and in yesterday's video, episode 893, I took people through a bit of a concept on how you can make money from different price patterns. It's the pattern that's important. Also, I selected this particular one from the depth chart. Let's go for a quick look through the crypto market. The greatest gainers in the past 24 hours: Conflux, Sui, Ton, Kava, HT, Rocket Pool, and Litecoin. The greatest losers past 24 hours: Pepe, Clayton, Atom, Nexo, Tron, TUSD, and USDT. We know that the alts follow Bitcoin's gravity. If Bitcoin is coming up, we expect the alts to come up. And we're not surprised when they do, because that's how the crypto market works. Please let me know in the comments what rule actually defines what I just said. Your active learning is the thing that will get you synchronized in with the market. It's just so incredibly important to do. Yesterday's video was very, very powerful about mindset. If you haven't had the opportunity to see yesterday's video, please have a look at it. It's really good. I'd like to thank everybody for their comments in yesterday's video. Just absolutely awesome. Kate and I appreciate you all so very much. Each day it's important to focus on your habits, because better habits create a better life. The truth is, the world is never against us, but our habits can be. And habits are really tricky because they remain off our radar. They're literally automated behaviors, so we don't give them any thought. How we look at the world is largely automated due to habits. One way to create really good habits is just to say the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. A lot of people say, Ken, I'm an investor or a trader. I don't want this creed. I don't care about these things. I just want to make money. The truth is, if you look at yesterday's video, you'll get a prime front row seat on why emotional management is absolutely critical. Okay, let's go through the creed. I know the universe is designed to make me succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I always solve my problems with positive excellence. Have a great one ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.